For many individuals, investing may be a difficult process. Today, everyone can become a successful investor with the right information and study. Previously, it was a luxury available only to the rich. However, before putting your money at risk in the stock market or on any other platform, it's crucial to complete your research and grasp the fundamentals of investing. This video will provide details on the 10 key pieces of information that every investor should know. Before starting, don't forget to like and subscribe to the Financial Tech channel for more future updates. Let's begin, then. Number 1. Understand your goals and risk tolerance. Any effective investment plan must include an understanding of your objectives and risk tolerance. In contrast to risk tolerance, which is the degree of volatility or loss an investor is ready to endure in order to reach their objective, a goal is simply the intended result. It's crucial to take the time to think about your objectives and risk tolerance before investing. Planning for retirement, saving for a down payment or education costs, or just gradually accumulating money are all examples of goals. Once your objectives are clear, you may assess your risk tolerance. Your financial situation, targeted return, and degree of comfort with market volatility all play a role in determining your risk tolerance, which is a personal decision. Number 2. Understand the different types of investments. Investments may be made in a wide variety of ways by private parties, public entities, and governments. These investments may be categorized broadly into two groups: debt and equity. Equity investments include purchasing stock in a firm, while debt investments entail lending money to a borrower in return for a predetermined rate of interest. Government bonds, corporate bonds, and municipal bonds are all examples of debt investments. Government bonds are often seen as secure investments with minimal risks since they are issued by the government of a nation. Businesses issue corporate bonds, which are riskier than government bonds but have a potential for larger returns. Local governments offer municipal bonds, which are regarded as secure investments. Number 3. Research investment options. There are a number of things to take into account while thinking about research investing opportunities. First and foremost, it's critical to pinpoint the business or subject that you are interested in and feel has room for expansion. To better grasp current trends, demand, and competition, do in-depth market research. Find chances where development is being driven by innovation and technical improvement. The risk-reward ratio of various investment vehicles, such as equities, mutual funds, or venture capital, should then be taken into account. Analyze these options' past success, volatility, and projected returns. Consider spreading your money across several assets, since diversification is essential for risk management. Number 4. Develop a diversified portfolio. A diversified portfolio is one that includes a range of assets to minimize risk and increase rewards. A portfolio that is appropriately diversified should blend stocks, bonds, and other assets like commodities and real estate. Diversifying across different asset classes may lower risk while still generating respectable returns, since each form of investment has its unique risk-return profile. Additionally, it is important to maintain portfolio diversity over time, since different assets may increase or decline throughout various economic cycles. It's crucial to take one's own risk tolerance, time horizon, and financial goals into account while building a diversified portfolio. A financial advisor may assist a person in assessing their particular position and creating a portfolio that is best suited to their unique requirements. Number 5. Utilize tax-advantaged accounts. Investment accounts that provide investors with specific tax advantages are known as tax-advantaged accounts. These accounts are intended to assist you lower your taxable income and boost your investment return. Account types that are tax-advantaged include IRAs, 401(k), HSAs, and 529 plans. Your assets may grow tax-free with tax-advantaged accounts, which is their main advantage. This implies that you won't have to pay taxes on the earnings from your investments when you take your money. You may also deduct contributions from your taxable income if you contribute to certain tax-advantaged accounts. Your total tax burden may be lowered as a result. As the tax advantages may help you maximize your return on investment, tax-advantaged accounts are an excellent method to save for retirement. it's crucial to weigh your alternatives and comprehend the numerous tax advantages and conditions that each sort of account entails. You may choose the best account for you by doing this. Number 6. Rebalance regularly. A crucial component of sound financial planning is portfolio rebalancing. Rebalancing is the act of moving your assets around to keep your asset allocation at the correct level over time. This procedure is crucial since it may assist to guarantee that your portfolio is diversified and that it still supports your individual objectives. You should routinely rebalance your portfolio to help guard against significant losses and maintain an appropriate asset allocation. Depending on your objectives and preferences, rebalancing may be done yearly, quarterly, or even weekly. To maintain portfolio diversification, individual stock investments may be sold and swapped out for new ones during rebalancing. Additionally, switching investments across various asset classes might assist to reduce losses and boost profits. Rebalancing may help keep your portfolio on track and in accordance with your individual financial objectives when done on a regular basis. Number 7. Monitor your investments. It's critical for investors to keep an eye on their holdings. It is crucial to make sure that money is kept safe and secure in addition to helping them to maximize their profits. Checking the market performance of the assets is one of the most crucial components of investment monitoring. Investors should keep up with news that might impact the value of the asset as well as the performance of their investments. It's also crucial to keep track of the business's finances and basics. To better understand the company's financial health and performance, it is a good idea to review its balance sheet, income statement, and cash flow statement. Number 8. Keep costs low. One of the most crucial things to keep in mind when it comes to keeping prices down is to comparison shop. Before making a purchase, whether online or in person, compare pricing. Do some research on the item you're interested in to see if you can get it for less elsewhere. Additionally, be sure to benefit from any deals or promotions that may be running. Consider how much you truly need as well. If you don't utilize it all, buying in bulk won't help you in the long term, even if it may be a fantastic method to save money. Finally, establish a budget and follow it. Know the range of prices you can afford to spend for various products, and do your best to keep inside it. You may guarantee that you keep prices down by paying attention to these suggestions. Number 9. Avoid overconfidence. Overconfidence is a sense of certainty that is unsupported by reality or facts. Overconfident persons may not feel the need to learn new things or develop their abilities, which may result in poor decision-making and a lack of drive. Overconfidence may sometimes result in irresponsible behavior and risky hazards. It may cause individuals to engage in risky activities and overestimate their capabilities. Additionally, it may foster an atmosphere of rivalry and distrust since people may not be receptive to advice from others because they are so confident in their own talents. Number 10. Seek professional advice when needed. Sometimes a challenging circumstance or issue that develops is too complicated or challenging for you to handle by yourself. In these situations, it's crucial to get expert guidance from a trained person or group. One may get expert assistance from a variety of sources, including therapists, financial advisors, attorneys, and healthcare providers. It is crucial to confirm that the person or business you are contacting is authorized to provide the services you want before getting professional assistance. Additionally, it's critical to perform some research to confirm the validity of the information being given. Asking the right questions can help you make an educated choice when you seek expert counsel. This might make it easier for you to comprehend the information being offered and how it relates to your requirements. In challenging or complicated circumstances, expert counsel may be quite helpful in ensuring the best result. This is it for today's video. What do you think of our video? Let us know in the comment section below. Don't forget to like and subscribe to our channel for more future updates. Thanks for watching.